Hello everyone, this is Justin Smythe from nextbigtrade.com. This is the index review for February 28th, 2025. The S&P 500 was down just under 1% this past week. The S&P 500 broke through the 10-week moving average, but did bounce around the 30-week moving average at the end of the week. On Friday, there was actually a pretty sharp bounce to end the week after the market was essentially down on heavy volume for the first 4 days of the week. And as I discussed in the newsletter and the title of this newsletter, we basically had a failed breakout that kicked off the negative move lower that continued this week. And this failed breakout really got going on Friday of the previous week. The S&P 500 broke down through the 20-day moving average. We'll go ahead and move to the daily chart to really drill in down on that. But heading into the previous week, the S&P 500 started to emerge out of this sideways consolidation. There was an increase in stage 2 breakout activity, and there was a leading sector that started to emerge around here. Things were looking better. We were getting back up to this resistance level and starting to move higher. But there were a lot of stocks, however, that were really having trouble breaking out around here. And then what happened was on Thursday, the market started to move lower, but it did bounce off the 10-day moving average. And then on Friday was really where things changed. The S&P 500 had a sharp move lower, closed at the lows of the day on an increase in volume, and then, broke this 20-day moving average and really set the stage for what happened this week. As soon as trading opened on Monday, the S&P 500 continued lower, broke the 50-day moving average, and then moved lower all week. You can see this cluster of heavy volume on the downside over the last week or so. And then again on Friday we got that bounce around the 30-week moving average, 150-day moving average, and there was an increase in volume on Friday. I think this might be related to stock options expiration is the week previous to this, but maybe there was month-end expirations. There was a lot of volume right at the end of the day that produced this heavy volume increase for the day. So that's probably what was going on there. I wasn't quite sure exactly why there was such a surge in volume to end the day on Friday, but that's why you see this big increase in volume on Friday. The end of the trading day really had a surge. And we did hold the 30-week moving average so far, which it's typical for the market to bounce around the 150-day moving average the first time it tests it. So that's, and you've got this support level down here as well. So pretty logical to see a bounce at the end of the week. It's possible that the S&P 500 goes back and starts to rally a little bit more early next week, but now you've got these short-term moving averages overhead. You've got the gaps. This is the DeepSeek gap, and you got the tariff gap above us now, and you've got this overhead price action now above current levels to get back into, which means the market really is going to have to find a lot of power to bust back through this. Otherwise, it's just going to roll over and continue lower. So now we've got resistance above us. We've had a major breakdown, and we'll see what happens going forward. Just want to go back to the weekly chart real quick and talk about, now the market's back in correction here. What is going to get us out of this correction is going to be new leading sectors and new stage 2 breakouts. When we came out of the April 2024 correction, semiconductors started leading the market higher again. Nvidia broke out again around here and was powering the market higher. And then coming out of the August and September corrections, PLTR, a lot of software, artificial intelligence stocks started leading the market higher. And then you had a ton of leading themes during this period. You had space, drones, cryptocurrency reignited. More sector themes were firing off here than during any period since about 2020 or 2000, early 2021. So really, this was a great period to trade stocks, lots of big gains in individual stocks. And then now what's going on, we'll discuss this in the sector review, but there's tons of sectors that got beat up the last 2 weeks, broke key moving averages on heavy volume, and the market just needs new leadership to really get out of this correction. So until the new leadership emerges, the market's probably headed lower. And we still haven't had a major correction now since October 2023. So I think there's plenty of room for the market to move lower here. We could get a move that goes all the way down and retests maybe this August low again. And obviously that would flush out a lot of people and create potentially another great buying opportunity. So really the name of the game right now is being patient until we get a flurry of stage 2 breakout activity and new leading sectors. The trend probably is going to be down. Moving on to technology, NASDAQ 100 dramatically underperformed the S&P 500 this week, broke the 10-week moving average on heavy volume, started to break the 30-week moving average. Technology really was where the brunt of the selling was this week, while the financials actually held the market up. Really all the selling was in technology. That's typically bearish for the market, and you can see the relative strength down here is now underperforming the S&P 500 again, and that typically happens during bearish periods in the market. One of the last examples was that July-August period where the biggest correction in 2024 occurred, with technology having a massive correction. NASDAQ 100 did bounce around the 30-week moving average. Again, very logical area to see a bounce start, but now we're moving back into all this resistance. I think it's very possible we're just going to see a bunch of resistance here and then another move lower unless a new leading sector emerges. Small cap tech, NASDAQ composite, badly underperforming, breaking key moving averages, sitting right on top of the 30-week now. You can see this cluster of heavy selling pressure too, right around this topping area, and the failed breakout here. So again, this is bearish action. And then our Russell 2000 trading entirely below the 30-week moving average this week. This hasn't happened since October 2023. We talked about how it fought with this level for weeks and weeks and weeks and months. Couldn't figure out which way it wanted to go around this 225 level, and then finally breaks down again, and it seems like it's heading lower here. The regional banks are acting weaker than the major banks too, which would impact the Russell moving lower. So Russell looking like it's in poor shape here. The VIX is trending above a rising 10-week moving average. That's a bearish configuration for the stock market. We've got some clear resistance here. If we get above this over the next week or two, we're going to continue the bearish trend lower, and we could get a nice upside move in volatility. And then finally, breadth has plenty of room to move lower here. The S&P 500 actually had more stocks that were up last week than down. And again, that was due to technology was really where most of the selling was. Financials had most stocks were up last week. And the market could be crowding into financials as one of the last remaining leading sectors, while technology was so weak. So there's plenty of room to move lower here. Whenever breadth gets really washed out and oversold is when the market is vulnerable to either finally get out of a correction or at least have a big counter trend rally. And that's what happened back here too, when we had this first pullback. What breadth was still blown out, it decreased the odds that it would just continue lower. And then we did get this rally here, and now we've got plenty of room to move lower. So most stocks are actually above the 50-day moving average, which means they have plenty of room to move back below it. And even on the 20-day moving average, there's more than half of S&P 500 stocks are above that short-term moving average, which means, again, there's plenty of stocks that have room to move lower. And whenever we get washed out is when it's more likely we're going to at least bounce. So bottom line, pretty good setup for the bears here. There's probably going to be a little bit more of a rally, early next week coming out of, the correction this week. But until these new leading sectors emerge and until we get some powerful stage 2 breakouts, the market's going to remain in correction. And after such a powerful move in 2023 and 2024, I think there's room for a large correction here. Perhaps the August 2024 lows look like a good downside target, potentially for this current correction.